The clock is ticking for some of the most popular stablecoins in Europe. With new EU regulations on the horizon, Coinbase has announced plans to delist stablecoins that don't meet the MiCA standards. Is your favorite stablecoin at risk? What does this mean for the future of digital assets in Europe? Stay tuned to find out. Welcome back to Gold Rush Crypto Daily Channel, where we bring you the latest and most important updates in the world of cryptocurrency. Today's breaking news is something every crypto trader needs to hear, especially if you're in Europe. Coinbase has announced it will be delisting stablecoins that fail to comply with new EU regulations by December 30th. What does this mean for USDT and other stablecoins? We'll cover everything you need to know, so make sure to watch till the end for all the crucial details. Before we dive into the specifics, let me give you a quick teaser. The European Union's new MiCA regulations are about to change the crypto landscape in a big way, and stablecoins are right in the crosshairs. Will your assets be affected? And what's Coinbase's next move? Stick around because you won't want to miss what's coming on December 30th. Coinbase to delist non-compliant stablecoins by December 30th. Let's get right into the heart of it. Coinbase announced on Friday that it plans to delist stablecoins that do not comply with the European Union's new MiCA laws, starting from December 30th. This is huge news, especially considering that MiCA, which stands for Markets in Crypto Assets, is set to reshape how the EU handles digital assets. So, why is this happening? The European Union is tightening the screws on the crypto market, and stablecoins are at the top of the list. According to a Bloomberg report, Coinbase will no longer support stablecoins that don't meet MiCA's strict standards. For users in the European Economic Area, EEA, this means that if a stablecoin you hold doesn't make the cut, you'll need to convert it or move it by December 30th. Coinbase will allow users to exchange their non-compliant assets for compliant ones, like Circle's USDC, which has already obtained a MiCA license. This isn't just Coinbase reacting to the laws. They're preparing for a massive shift in how digital assets are regulated in Europe. If you're in the EEA, you've got some decisions to make, and you'll want to be aware of which assets are at risk of delisting. What is MiCA, and why does it matter? Now, let's take a step back and look at MiCA itself. The Markets in Crypto Assets regulation is the EU's effort to bring more oversight to the digital asset industry. Passed earlier this year, MiCA aims to ensure that stablecoin issuers meet certain regulatory requirements, including holding an e-money license from an EU member state. For stablecoins, that means stricter rules on reserves, audits, and transparency. The MiCA law officially extended its oversight to stablecoin issuers on June 30th of this year, and by December 31st, exchanges like Coinbase will need to be fully compliant or face serious penalties. This is part of the EU's broader push to protect consumers and ensure the stability of the digital asset ecosystem. But it's not just Coinbase making moves. Other exchanges like Binance, OKX, Bitstamp, and Uphold have already started delisting non-compliant stablecoins like USDT to stay ahead of the curve. Is USDT at risk? Now, let's talk about one of the biggest stablecoins in the market, Tether's USDT. As it stands, USDT is not yet fully compliant with MiCA's new requirements. This raises some serious questions. Could Tether, the world's largest stablecoin by market cap, actually be at risk in Europe? At this point, Coinbase has not confirmed whether USDT will be delisted, but it's looking likely unless Tether can meet MiCA standards by December 30th. This is a big deal because USDT plays a major role in trading volumes worldwide. If it gets delisted in Europe, it could affect liquidity, trading strategies, and even market sentiment. So, if you're holding USDT, you'll want to pay close attention to any announcements in the coming months. Which stablecoins are safe? Let's take a look at which stablecoins are in the clear under these new regulations. According to reports, only Circle's USDC and EURC tokens have fully obtained MiCA licenses. That means these assets are considered compliant and can continue to operate within the European Union without any restrictions. USDC, in particular, has been a top contender in the stablecoin space, and Circle's proactive approach to obtaining the MiCA license means that European users can continue trading and holding USDC without any worries. However, this doesn't mean the competition is over. Other stablecoin issuers are working to meet the new standards, but the clock is ticking. Before we continue, if you're enjoying this deep dive into the latest crypto news, don't forget to hit that like button and subscribe to Gold Rush Crypto Daily channel. Stay up to date with the latest in crypto regulation and market trends by turning on notifications. Let's help you stay ahead of these game-changing developments. What happens after December 30th? Now, let's discuss what happens after the December 30th deadline. Coinbase has made it clear that, after this date, any stablecoins that don't meet MiCA requirements will be delisted. This means that you'll no longer be able to buy, sell, or hold these assets on the platform. Coinbase is encouraging users in the EEA to convert their assets to compliant options like USDC or to withdraw their funds before the deadline. It's important to note that delisting doesn't necessarily mean the end of the road for a stablecoin, but it does mean limited access for European users. For traders and investors who rely on stablecoins like USDT for liquidity and hedging strategies, this could be a major inconvenience. That's why it's crucial to stay informed and plan your next moves carefully. Other exchanges, like Binance and OKX, are already taking steps to comply with MiCA, and it's likely that many more will follow suit as the deadline approaches. The pressure is on for stablecoin issuers to meet these new requirements, or risk losing access to the entire European market. How does this affect the broader crypto market? So, what does this mean for the crypto market as a whole? Well, the EU is one of the largest economic blocs in the world, and MiCA represents one of the most comprehensive regulatory frameworks for digital assets to date. By enforcing these laws, the EU aims to bring more legitimacy to the crypto industry, making it more attractive to institutional investors. However, in the short term, this regulatory tightening could lead to some volatility, especially for stablecoins like USDT. We could see a shift in trading volumes as European users move away from non-compliant stablecoins, which might lead to more demand for compliant alternatives like USDC. If Tether and other issuers can't meet these new standards, we might also see a reshuffling of the stablecoin leaderboard. That's all for today's update. The clock is ticking for non-compliant stablecoins in Europe, and Coinbase's decision to delist these assets is just the beginning. Make sure you're prepared for these changes, especially if you're holding stablecoins that might be affected. If you found this video helpful, don't forget to like, subscribe, and share it with your fellow crypto enthusiasts. And as always, stay tuned to Gold Rush Crypto Daily channel for more insights on the latest crypto trends and news. Thanks for watching, and be sure to check out my other videos for more in-depth crypto analysis.